Welcome back to Today Assets Report, the channel where we cut through the noise and bring you the stories that actually matter in the world of digital finance. I'm glad you're here today because what we're covering in this episode is the kind of stuff that makes you stop, put your phone down and think, wait, did I just miss something massive? Because the answer might actually be yes. Today we're talking about XRP, Ripple, and a South Korean bank that just quietly rewired the way 15 million people move money across borders without using SWIFT. And somehow barely anyone is talking about it. We've also got Subway, yes, the sandwich chain, running nearly 500,000 transactions a year through Ripple's infrastructure. We've got the Clarity Act moving through Congress faster than most people realize. And we've got institutional analysts laying out exactly why all of this could structurally change XRP's role in global finance. So buckle up, because this is one of those episodes where by the time we're done, you're going to see this market very differently than you did when you sat down. Voice. Let's start with KBank, because this is the story that sets the tone for everything else we're going to cover today. KBank is South Korea's first pure online bank. No branches, no teller windows, just a fully digital banking experience built for one of the most tech-savvy populations on the planet. And on April 27th, KBank officially confirmed that it has formalized a strategic partnership with Ripple. Now, before you scroll past that, let me give you the full picture, because the context here is what makes this announcement genuinely significant. South Korea is not a small market. It is one of the most digitally active banking environments on Earth, with a government that has been actively developing its central bank digital currency framework for years. When a Tier 1 digital bank in that environment signs a deal with Ripple and begins running a stablecoin proof of concept on Ripple's rails, that is not a footnote, that is a signal. And the more you understand about KBank's position in South Korea's financial ecosystem, the bigger that signal gets. Voice. Here's what you need to understand about KBank's reach before we go any further. This is not some niche fintech startup operating on the fringes of the Korean banking system. KBank is the sole banking partner of Upbit, and if that name doesn't ring a bell, Upbit is South Korea's largest cryptocurrency exchange. Due to local regulations in South Korea, every single Upbit user is required to register with KBank in order to trade fiat currency for crypto. That one regulatory requirement created an extraordinary relationship between KBank and the Korean crypto market. And the result? KBank's customer base exploded from roughly 2 million users back in 2020 to over 15 million by the end of last year. That is not organic growth in the traditional sense. That is a digital bank positioned at the absolute intersection of traditional finance and the crypto economy. And now that bank is partnering with Ripple. Let that sink in for a second, because the implications run deep. Voice. The partnership itself is structured in 2 phases, and both of them matter. Phase 1, already completed, focused on verifying a wallet-based remittance system. Think of it as a proof of life. Ripple and KBank work together to confirm that the underlying technology actually functions the way it's supposed to in a real banking environment. Phase 2 is where things get really interesting, and it's ongoing right now. This phase is designed for faster setup and wider scalability, connecting wallet functions directly with blockchain networks to streamline international money movement. The collaboration is specifically built to explore how Ripple's global blockchain infrastructure can enhance transaction speed, reduce cost, and increase transparency in overseas remittances. And here's the part that should grab your attention. The system is built so that funds move directly on-chain. That means fewer steps, fewer intermediaries, and critically, fewer days compared to routing payments through the traditional SWIFT correspondent banking system. That is the SWIFT bypass that most people haven't noticed yet. Voice. And look, let's talk about what a SWIFT bypass actually means in practical terms, because this isn't just a technical detail. It's a fundamental shift in how money flows across borders. The traditional international wire transfer process is one of the most inefficient systems still operating at scale in global finance. When you send money internationally through a traditional bank, that payment often has to travel through multiple correspondent banks before it reaches its destination. Each one of those intermediaries takes time, charges fees, and adds friction. A payment that should take seconds can take 3 to 5 business days. Fees can stack up in ways that are completely opaque to the person sending the money. And for banks operating across dozens of currencies and jurisdictions, the complexity multiplies at every step. What Ripple's infrastructure offers is a direct path, blockchain-based on-chain movement of value that eliminates most of those intermediary steps. When KBank adopts that for 15 million users, the scale of the shift is enormous. Voice. Now, while we're on Korea, it's worth zooming out just slightly because KBank is not the only major Korean financial institution that's been quietly building a relationship with Ripple. We've also been tracking the Kyobo Life Insurance and Ripple custody deal, which tells a similar story from a completely different angle of the financial industry. When you see a major digital bank running remittance pilots and a major insurance company engaging with Ripple's custody infrastructure, you're not looking at isolated experiments anymore. You're looking at a country-level pattern. South Korea is moving fast, genuinely fast, and the breadth of these partnerships suggests that Ripple has established real institutional credibility in one of the world's most important digital finance markets. That's not something that happens by accident, and it's not something that reverses easily once it gains momentum. The foundation being built in Korea right now is the kind that tends to last. Voice. Now let's shift gears entirely and talk about Subway. And yes, I mean the sandwich restaurant. Because this story came out of nowhere and honestly deserves a lot more attention than it's getting. A case study posted on Ripple's website reveals that Subway, with nearly 37,000 locations across 100 countries, is now running its treasury operations through Ripple's infrastructure via a platform called G-Treasury. And the numbers attached to this are not small. Subway is processing 400,000 transactions every single year through this system. They've achieved 98% cash visibility across their global operations, and 90% of their payments are now fully automated. Let me repeat that. 90% of Subway's payments are automated through Ripple's infrastructure. This is not a pilot program. This is not a proof of concept sitting in a sandbox somewhere. Subway is a live operational enterprise client running real money through Ripple's rails every single day at a massive global scale. Voice. Think about what Subway's business actually looks like from a treasury perspective, because it's genuinely one of the most complex operational challenges in the restaurant industry. You've got 37,000 locations across 100 countries, which means you're dealing with dozens of currencies, dozens of regulatory jurisdictions, franchise agreements, supplier payments, royalty flows, and all of it happening simultaneously across time zones that don't care about each other. For a treasury team managing that kind of complexity, the traditional multi-bank, multi-currency correspondent banking model is a nightmare. Settlement delays cost real money. Currency conversion fees compound at scale, and the lack of real-time visibility into where your cash actually sits on any given day makes financial planning genuinely difficult. Ripple's infrastructure solves multiple layers of that problem simultaneously. And when Subway, one of the world's most recognized global brands, trusts a platform to automate 90% of its payments, that is enterprise-grade validation that this technology stack actually works in the real world. Voice. And here's the question that I think everyone should be sitting with right now, because it's the one that has the most significant long-term implications. If Subway is already live on Ripple's infrastructure at 400,000 transactions a year across 100 countries, how many other multinational companies are quietly running through the same system and just haven't made headlines yet? Because enterprise technology adoption doesn't happen in isolation. Companies share vendors, they share case studies, they sit in the same industry conferences, and they follow the same technology evaluation cycles. When a brand as globally visible as Subway publishes a result showing 98% cash visibility and 90% payment automation, that's the kind of case study that gets forwarded around treasury departments at major corporations all over the world. I would bet confidently that Subway is not alone in Ripple's enterprise pipeline. There are almost certainly dozens of companies in similar operational situations that are either piloting this infrastructure right now or actively evaluating it. Voice. Now let's talk about the chart, because even with all of this positive news flow, the price action on XRP deserves an honest look. We closed essentially neutral on the weekly last session, and looking at the monthly chart, price is sitting right around 141s. The monthly close is coming in just about 3 to 4 days. That's Thursday night. And right now we are sitting in the middle of what technical analysts are calling a critical battleground zone. The key levels to watch are 127 on the downside and 143 on the upside. That 127 level is particularly significant because it represents old 2021 resistance that has since become support, and the market is currently testing it. The RSI on the monthly is sitting around 47, which puts it in neutral territory. No clear divergence signal in either direction at this point. The chart is telling us that the outcome of this monthly candle carries real weight for the near-term direction. Voice. So what do the bulls need to see, and what are the bears watching for? On the bullish side, analysts are looking for a monthly close above $1.90 to confirm that the current demand zone held and to open a path back toward a retest of the 290 area. That would be a meaningful reclaim and would likely bring a significant wave of momentum buyers back into the market. On the bearish side, the key level to watch is 127. If that zone breaks convincingly, some analysts are pointing toward a potential move down toward the 1.0 level. And in a deeper correction scenario, potentially all the way back to the 0.60 to 0.75 range, where this move originally started. The RSI needs to either bounce decisively above 55 to confirm bullish momentum or push below 40 into capitulation territory before a high-conviction directional read is really available. The measured view right now is that the macro structure has not broken down, but this correction may not be fully priced in just yet. Thursday's monthly close is going to tell us a lot. Voice. Now let's step back from the chart and look at what may be the most important catalyst sitting on the horizon, the regulatory environment, and specifically the Clarity Act. House Financial Services Chair French Hill stated this week that the Senate is effectively leaning on the work already completed in the House version of the bill. Hill's position is direct and notable. The key stablecoin and DeFi issues have already been resolved on the House side, and the Senate simply needs to adopt that framework. That is a very significant posture from a committee chair, and it changes the timeline conversation considerably. When the person responsible for steering financial legislation through the House says that the heavy lifting is done and the other chamber just needs to follow through, that is not a vague signal. That is a statement about where things actually stand. And the implication for XRP and for Ripple's broader infrastructure play could be substantial. Voice. That regulatory backdrop leads us directly to a detailed analytical breakdown that's been circulating this week from Evernorth. Their team published a piece titled 5 Reasons the Clarity Act Could Accelerate XRP Adoption, and the arguments they're making are worth taking seriously. The first point is XRP's commodity status. The March 17th joint interpretive guidance from the SEC and CFTC already classified XRP as a digital commodity, which combined with the outcome of Ripple's court case removes years of accumulated regulatory uncertainty from the equation. The second point is institutional capital compliance. Certain institutional allocators have reportedly held back from deploying capital into XRP specifically because it lacked the statutory clarity required by their mandates. The Clarity Act could resolve that structural barrier. The third point is the stablecoin infrastructure framework, which directly expands the operating space for tools like Ripple's RLUSD stablecoin. And the fourth and fifth points build out a legal taxonomy that gives builders and global regulators a defined framework to work from. Voice. And here's the part about Evernorth that gives their analysis particular weight. This is not a neutral third-party research firm with no skin in the game. Evernorth holds over 473 million XRP in treasury and has disclosed plans to deploy that capital into on-ledger markets. So when they publish a 5-point breakdown arguing that the Clarity Act creates the regulatory environment their structure was built for, you need to understand that perspective for what it is, a major institutional stakeholder laying out their investment thesis publicly. That doesn't make the analysis wrong. In fact, the structural arguments they're making align closely with what independent regulatory analysts have been flagging for months. But it does tell you something important about the direction that institutional money is already leaning. These are not small players making speculative bets. These are organizations with hundreds of millions of dollars positioned in XRP that are actively mapping out how the legislative environment accelerates their deployment strategy. Voice. So let's bring all of this together, because when you step back and look at everything we've covered today as a single connected picture, something important comes into focus. A major South Korean digital bank with 15 million customers is running a stablecoin proof of concept directly on Ripple's infrastructure and building toward a full-scale SWIFT bypass. Subway is processing 400,000 transactions a year through the same technology stack with 90% payment automation already live. The Clarity Act is moving through Congress with the House chair signaling that the Senate framework is nearly complete. An institutional analyst with hundreds of millions of dollars in XRP are publicly mapping out how that regulatory structure unlocks the next phase of adoption. These developments are happening across enterprise adoption, banking infrastructure, and legislative architecture simultaneously. That is not a coincidence. That is convergence. And in markets, convergence of this kind tends to resolve in one direction. I'll be watching Thursday's monthly close closely, and I'll keep connecting the dots as this story continues to develop. As always, none of what I've shared today is financial advice. Do your own research, understand your own risk tolerance, and verify everything through your own sources. Hit that like button, subscribe to Today Assets Report, and I'll see you back here at 3:30 p.m. Eastern. Don't miss it.